Ask the Experts. I'm Jill Schlesinger, editor-at-large at CBSMoneyWatch.com. I'm joined by my wingman,
Jack Otter, executive editor of CBSMoneyWatch.com.
Excellent. And special guest star here live, not Skype, John Ulzheimer, nationally recognized expert on credit reporting, credit scoring, identity theft. He's the president of consumer education at smartcredit.com and the credit blogger for mint.com. He actually was in some of the evil empires you may have heard. FICO, which I think, how could one company have all of this information? I don't like it. Equifax and credit.com. John is the only recognized credit expert who actually comes from the industry. John, very nice that it's not a snowstorm for you. We're glad that we could give you a nice 60-degree day.
I was going to be here regardless of the snow, but thankfully 60 degrees and sunny, that fits the bill.
You know, for a Southern belle like you, we got to make sure you have good weather.
I appreciate, because Atlanta, when we get that much snow, it closes down the entire state. All
right, we have a ton of questions this week. If you've got a question, you can go on to MoneyWatch.com and you can log into our chat room. So we'll try to intersperse some of those questions, but we did get just shellacked, to use President Obama's term, with requests and questions. And so here we go. The first question from Michelle in Connecticut. My significant other and I own a house together. Both names are on the mortgage and deed and all the utilities. He has been out of work for a while and might have to claim bankruptcy. How would this affect me and my credit? So not legally married, I'm guessing, because it's a significant other.
Right.
But both of them are on the hook for pretty much everything.
Yeah.
He declares bankruptcy. What happens to her?
Bad news. Unfortunately, there's no good answer there, especially if they've got joint credit cards, which it sounds like they probably do. When you file a Chapter 7, you have to include all of the debt. You can continue to make the payments on it, which is called a ride-through, or you can reaffirm the debt, which means you re-up your obligation with the creditor. However, from a credit reporting perspective, those accounts are all going to show as included in bankruptcy. And since they're joint accounts and they show up on both credit reports, unfortunately, the bankruptcy is going to persist on both files for several years. And it's going to have, as you can imagine, a very significant negative impact to their scores.
Now, what happens if they never had anything joint? What if things were in one name or the other, but not married? What then? Right.
So let's say hypothetically that all of the accounts were in one of the names, but not in both of the names.
Yeah.
And he just filed bankruptcy, then it would not in any way show up on her credit reports, because credit reports are maintained at the individual consumer level, not at the joint coupled or significant other or married level. So you're very safe unless you file jointly.
All right.
Can they act quickly before he files?
Yeah, what happens if they well, they can't do it with a mortgage.
Yeah,
that's bad news, right?
That's in today's economy, a mortgage is a very, very difficult thing to get rid of. The credit cards, certainly they can close them, move balances from one card to another card. The problem is if you're about to file bankruptcy, you've probably got very, very bad credit already. So lenders are going to be less flexible with respect to opening new accounts and letting you move the money around.
Now, along the same lines, a question from Diane who asks, if one spouse files for bankruptcy, does the other spouse have to? So, let's just say Jack and I are married. Sorry, Diane. But he has to file bankruptcy. Now,
well, why me?
Okay, because you're a screw up, obviously.
Okay.
Let's just pretend this, play it out. House is in his name.
Right.
Everything is in his name. But can he declare bankruptcy and not? And again, as long as we don't have any joint accounts, is that the deal?
That's the deal.
Or joint obligations?
That is the deal. You can file an individual bankruptcy, or you can both go in and file jointly. And that is, I get into this argument all the time about what do you do when you get married? Do you commingle all of your liabilities? That's the downside to doing
Anybody in my situation, anyone who has actually been through a divorce knows that commingling never makes sense.
Right. Why? Because it's hard to unmingle.
Really. And I think especially if you're older and you both kind of have your own stuff already,
right.
Sometimes it's kind of, I'm not saying you shouldn't go out and buy a house together, but you have a joint credit card with your wife?
I do have one, yep.
You keeping a tough rein on her?
No, I never know what I'm going to see on that bill.
Well, let me
actually, sometimes she puts her work expenses on it.
Really?
Yeah.
Interesting.
Well, let me.
By the way, Birkin bags do not count as a work expense.
Let me throw out a great question, kind of a rhetorical question. Why do you apply jointly for a credit card? You don't need two incomes to qualify for a credit card. There's no upside for the consumer to apply jointly for a credit card. I can add you as an authorized user. Jill, I can add you as an authorized user, and we have the same efficiencies as using a card, but we're safe from the liability bug. The minute you start applying jointly, the lender's happy because they would rather have two people on the hook rather than one person on the hook. And as, unfortunately, you may or may not have experienced in your divorce, when you go through a divorce, it is next to impossible to separate those debts.
And so many other things. Let's not go there. I got another question here. Someone who is just emerging from bankruptcy. What is the best credit to apply for once you've been discharged from a Chapter 7 bankruptcy? My credit score is currently 646 with Experian. It was 589 just a month ago. I believe the change happened because my bankruptcy was discharged on February 1st. And the creditors are now starting to update their balances, right? So now, want to reestablish credit. I just don't know where to start. Should I wait for another month or two as more of my creditors update their balances to zero?
Well, that's a good question. And if you want to, there's certainly nothing wrong with reestablishing credit. You should reestablish credit, assuming you want to function within the credit environment ever again. Generally, the best tool to use when you're emerging from a bankruptcy or any sort of bad event is a secured credit card. They're not a good tool for long-term use, but a secured credit card, which serves a very, very unique purpose, is good to get something good on a credit report that's very, very inexpensive. And you're essentially buying the credit. You make a deposit with the bank, you get a credit card with a credit limit equal to the deposit issued to you. It's a legitimate credit card, but you've already prepaid essentially for it. Shows up on the credit reports, always a good thing. But they've got very, very low limits, $200, $500, whatever. Again, it's not something you're going to want to use for years. Once it serves its purpose, then you're going to start getting solicitations from the unsecured credit cards. That's when you've essentially kind of made it.
Okay.
I'm guessing the bank doesn't pay you 21.99% interest on your own money, though, huh?
So there's no interest.
Believe it or not,
keep it on deposit with
there
them?
are some credit unions that will pay you a tiny, tiny amount of interest. And there are also some credit unions will actually give you $1.50 per every dollar deposited as a credit limit. So search around. They're not all dollar for dollar. There are some that you can actually get a better limit.
Now, let's say your child gets into trouble. You don't want to necessarily bail him or her out. Let's call it him. You know, why not?
Are we married? Are we still married?
No, we're not.
Okay, so we're not talking about our children here.
Let's do this. Let's say our child got into a problem, okay? And, hits a bad time, declares bankruptcy. Now, I don't want to bail him out. I don't want to actually pay off the 20 grand that's on the credit card because I want him to actually suffer enough and suffer the consequences. But should I then, just to get him started, should I, kind of preload a secured credit card in his name for him?
Well, if he files bankruptcy, then you don't have to pay any of the debt because it's been discharged, right?
But I'm saying that, like, in going forward.
Right. That is one method. I can tell you a better method. A better method would be to add him as an authorized user on one of your existing cards that has a very high credit limit, a very low balance, and is very old and has never been paid late. And then he will almost immediately get the benefit of the entire history of that account because most credit card issuers will report the account to the authorized user's credit report. That's actually a very, very common way for young people to establish credit is their parents add them as an auth user. It's like a credit card with training wheels.
Right.
You don't even have to give him a card.
Oh, that's interesting.
You don't even have to give him
That's kind of funny. So it's sort of piggybacking on our sterling credit.
That's exactly
That's
right.
good.
Yep.
All right,
But I love the tip of not giving him
That's
the
right.
card because my first thought was, well, geez, this is a kid who's already had problems. Why are you going to let him in?
Don't even give it to him.
Yeah, I like that. Jean in Miami wants to know my credit score is 790. What a show off. I bet you got an 800 on your SATs too. How much should I anticipate it to drop due to a short sale or foreclosure on an income property, not my primary residence?
So am I allowed to say catastrophic on the internet?
Yes. You can say catastrophic or a Blanks Creek.
Or worse.
Yeah.
You're up Blanks Creek. Regardless of whether it's investment property is really irrelevant. If it's on your credit report, that's really the key question. And if one of the issues with respect to short sales is they are being grossly mismarketed by real estate agents. They're being marketed as this is a safe and better way to get out of a bad mortgage. It's neutral to your credit, and that is absolutely 100% not true.
Can we just do the translation of that? It is an excellent way for me to continue to earn a commission off of my first bad sale to you.
Yeah, very well said.
Thank you.
There's actually even companies that are like teaching people how to become short sale specialists. The
Mortgage brokers from 2005.
The term short sale, the two words short and sale, cannot show up on a credit report. There is no systemic way for a lender to report a short sale with that verbiage. But they are reported one of two other ways, either as a settlement or as a charge-off, because both are true. The lender settled for less than the full principal balance, and they probably charged off the deficiency. That does show up on the credit report. And a 790, look, credit scores take the path of least resistance. A 790 is a very, very good score. Adding a settlement or a charge-off to a 790 is the quickest way to turn it into a 590.
Oof.
Wow.
But to get out of a bad mortgage, it's maybe something you're going to have to deal with.
Okay. This next one's from Brad. I recently decided to take advantage of the drop in home prices to change from a renter to a homeowner. To my surprise, I found out that I don't have a credit score. That's funny. So no bank was willing to offer me a mortgage, or only at a very high rate. Why don't I have a score? Because I'm frugal and pay cash or with my single credit card, which I pay off every month. I paid off my car loan a few years ago. I was told by one loan officer that I need to be in debt to at least 3 companies to receive a credit score. All right, I can't. Apparently, to be in debt to any less than 3 is un-American.
Yeah.
It's like being punished for being responsible with my finances. So here's my question. What's the simplest and least expensive way to add 2 or more debt references to my credit report so that I can establish a credit score?
Well, first off, you don't have to do that because what your loan officer told you is absolutely wrong, right? First off, you don't have to have debt. You don't have to have 3 accounts in debt to earn a score. There's certain minimum criteria that your credit file must meet in order to be able to generate a score. And the 3 criteria are this. A, you can't have any sort of deceased indicator on your credit file, and that's a fraud protector. If you're dead, no one should be applying for credit in your name. Deceased indicator, boom, no score.
You can vote in Chicago, but
That's right.
Exactly.
That's right.
And many times.
Second, you have to have at least 1 account that is older than 6 months.
Sounds like he has that.
Okay. Third, there has to be at least 1 account that has been updated within the past 6 months. May not have that.
Right.
And 1 account can satisfy both of those criteria. If I have a Sears card I opened 20 years ago that just updated last month and I'm not dead, then I will qualify for a score. I don't have to have a balance on it. Again, you don't have to be in debt.
Yeah, Brad, go out to dinner and use your credit card.
You don't even need to do that. As long as it's updating every single month like most credit card issuers do, then you're going to qualify for a score. Now, if he has a bunch of inactive cards on his credit report that are either he doesn't use them or they're closed, then he may, if he wants a score, and this actually is a very good example of why you should not avoid the credit system. There are a lot of people who are like banging the drums, don't ever use credit, it's evil. That's why you have to use credit, because now what's he paying for his mortgage?
Right.
Right, out the nose, because you can't assess his risk without a score.
Right.
So, yeah, absolutely. Go fill up your tank, swipe.
Right.
Buy groceries, swipe. And
Send
then,
us gifts. We'll take it.
Absolutely.
No problem.
Absolutely.
And then just pay it off in full at the end of the month. I mean,
There you go.
It's funny because all these, as you're kind of referring to all these people who just yell and scream about the evils of credit.
Absurd.
But the problem is the people they're talking to, frankly, are the irresponsible ones who can't handle
Yeah.
it and probably shouldn't. But these responsible people like this guy, use it. It's lighter than cash.
Yep.
Use it and pay it off.
That's exactly right.
Quick note here in the chat room from Penelope, which I love that name. I recently heard that when credit cards are charged off, that the credit companies can still make you pay as untaxed income on a 1099 form.
Well, the credit companies can't make you pay taxes. The IRS can make you pay taxes.
Whoops.
The credit companies can send you a 1099 because they are going to forgive a certain amount of that debt. What you do at the 1099 is certainly up to you. Your CPA will advise you to pay taxes on it. So another one of the interesting dilemmas when it comes to defaulted credit card debt is that you may not be paying Sears or Citibank, but when the government starts to knock on your door, you can't ignore that knock.
Wait a minute. So let me just make sure I understand this. So let's talk about our fictitious son again, right? And he goes into bankruptcy, and all these credit cards are basically discharged. He's going to get income from that, or not? Because
not on a bankruptcy. Bankruptcy, it's legal protection to get from the creditor.
Right.
He doesn't know it. But if he has $10,000 of credit card debt and he just ignores the creditor and forces them to charge it off.
Oh, then they're going to, I
gotcha.
gotcha.
Or if he settles, let's say he settles hypothetically for 50%, they may send him a 1099 for the other $5,000.
Well, I bet our son would lose that. That's my guess.
Do you have any recourse there? Can you negotiate a settlement in such a way that it's not reported as 1099 income?
They can not if you settle. If you settle, they're gonna 1099 you for the rest of it. Now, for mortgages, it's interesting. That's not taxable income any longer.
Right.
But I think with credit cards, I think it still is.
Now, just a quick one from Lynn. Does a loan modification adversely affect your existing credit score or any of your limits or anything like that?
Very much so.
Yeah.
A loan mod, and it doesn't matter if it's under the HAMP program or if it's under the government-sponsored loan program or a homegrown loan mod program sponsored by a mortgage lender themselves. And it's not the fact that it's being modified that's the issue. It's during the trial period. They always make you pay less than your contractual amount during this trial period, as some comical way to prove that you can make less than what you're pay less than what you're currently paying.
I know. It's terrible.
And what happens unfortunately is during that period of time they're actually reporting you as kind of a rolling 30 or 60-day late to the credit reporting agencies. Oof. Most loan modifications, the trial period was only supposed to be 3 months. Most loan mods are taking 6 to 9 months. So now you have 6 to 9 months of rolling late payments, thousands of dollars in past due amount, hundreds of dollars in fees. And if your loan mod gets denied, then they're going to start foreclosure proceedings
because you're so delinquent. Sakes, this is such a ridiculous program.
It's terrible. It's absolutely terrible. So the short answer to her question is absolutely. It's very, very uncommon that you get out unscathed by going through a loan mod.
Here's some more folks. They sound like they've been responsible with their credit but have low credit scores. Michelle writes, one of the downsides, and believe me, there aren't many downsides to living in rural Montana. That's great. I couldn't have written that. Is we have our mortgage and car payment through our local small bank. The downside is they don't report to credit agencies unless you don't pay. So both my husband and I are having a hard time getting our credit scores above 700 because no mortgage or large installment loan is being reported. We want to build a new house on our property. And when we get into a loan when we go in to get a loan from a larger bank, will they take this into consideration when looking at our score? What can we do to help the situation? We don't have any major credit cards. She says, I guess Cabela's Visa doesn't count. I don't know what Cabela is.
It's outdoor, like a fishing.
See, that's awesome. The good news is we're almost debt-free, she says.
Yeah. So, again, the downside of not being in the system, but it doesn't sound like it's intentional. It just sounds like they're doing business with a lender who chooses to not report to the credit reporting agent. There's a lot of liability when you start reporting to the credit reporting agencies, and some banks just do not have the appetite for that kind of liability. You have a ton of obligations under the Fair Credit Reporting Act the minute you start putting stuff on a credit report. Look, the Equal Credit Opportunity Act, and this is kind of a roundabout way of accomplishing this, the Equal Credit Opportunity Act requires a lender to consider any obligation that you make them aware of. A lot of consumers don't realize this. They can actually walk into a lender with their loan statements, their statements from the credit card issuers that don't report, and hand it to the lender and say, here you go, under ECOA, you have to consider this. And the law says they must. So people call this shoebox credit because they walk into a bank with a shoebox full of receipts and say, here you go, you have to consider this. Now, whether or not they will consider that to the point where they'll actually give them a mortgage is a different story. So you have an avenue to pursue, but it's not terribly successful very frequently.
I would say that the Cabela's Visa ought to be good. I mean, that has to be backed by a bank.
Right.
Cabela's is a pretty big store.
But maybe
I would
they're not
imagine
using it or not
it's got
enough.
But the issue, I think, what the emailer identified is that there's no large installment debt. And believe it or not, in the FICO scoring system, it's actually good to have installment debt experience on your credit report because it shows that you can manage a diverse. If you're just not a credit card user, you can manage a variety of different types of accounts.
Oh, that is interesting. Actually, hold on. All right, I got a million different questions here. Let's do this quickly. Duke wants to know what's the most effective way to resolve a credit dispute.
So if you have a credit dispute, you can do one of two things. You can either go directly to the credit reporting agencies and challenge it, as is your right under the federal law, or you can go directly to the furnisher of the information, which is either going to be a bank, a credit union, a collection agency, and you can challenge it directly with them. Either way, they both have an obligation to investigate and confirm the validity of the information. If you go to the credit bureaus, they're going to go to the data furnisher anyways and say, hey, look, this guy, Duke, is challenging this. Is what you're sending us correct or incorrect? Or the data furnisher is going to get the dispute directly from Duke, and they're going to say, okay, let's do our investigation. Yes, it's correct. We're going to confirm that it's correct, or it's wrong, and therefore we're going to correct it. The entire process I just described to you takes about 2 weeks and shouldn't cost the consumer any money. No.
It always seems worse when you think about it, though. More specific question about a dispute from Rob. I have an unpaid bill for $180 on my credit report for tree spraying services in 2008. I never received a bill from the company. However, a collection agency has now sent me one. Another interesting detail of the bill sent to me by the collection agency is the pricing. It's much higher than what would normally be charged for this service. The collection agency is not interested in helping me correct this. What can I do?
No, the collection agencies are not in the business of helping people correct things. They're in business
Get
to
your money.
Collect debts.
That's it.
It's not just a clever name.
No.
So you have a variety of rights under the Fair Debt Collection Practices Act, or FDCPA, and one of those is verification of the debt. So if you don't agree with the amount, you don't recognize the amount, you can challenge the validity with the collector directly, and they must go back to the original creditor, which in this case is this tree cutting service, I imagine, and verify the debt. Now, my guess is that the $180 has become some other larger amount because of either interest or the fee or the cost of the collection. It should not be several thousands of dollars. It still should be a fairly low amount. This is again, he didn't know about it, which I'm not sure. How do you hire someone to cut your trees and then think it's free?
No, he's like, oh yeah, I never got a bill.
So that's another topic for another time. But this is a great example of be diligent when you know you owe somebody something, because they know you owe them something. And if $180 is a very, very small amount of money to sacrifice your credit for 7 years.
Here's what I'm sorry.
I would say one thing, which is I'd skip the collection agency because, as you said, they're only in one business. Go to the tree trimmer sprayer and say, make your case. Hey, I didn't know about this. Here's the cash. I'm ready to give it to you. What I need from you is the letter to the collection agency saying, never mind, we're covered, and the letter to me saying he's met his obligations.
Now, that will work if they have consigned the debt to the collector, meaning the collector does not own the debt.
Right, but if the collector bought it.
There you go.
He bought the
receivable.
The tree company has washed their hands of it, and now you have no choice but to deal with the collector. Now, they will gladly accept your couple $100 and then show it paid in full.
Sure.
But if they've consigned it, that's actually a very good strategy.
Okay. Another dispute question from Bob. For 3 years, I've been attempting to remove a car loan on my credit report that is not in my name, my social security number, or even in my state.
Wow.
When I complain to Wells Fargo, they take care of it and provide authentication that it is in fact removed. But when I went to purchase a home last year, it was back on my Experian report. They removed it and provided authentication of such. I went to my credit union to purchase a new car, and guess what? That exact same loan was back on my Experian account. We disputed with Experian. They said that Wells Fargo needs to validate before removal. Wells Fargo states they have provided validation, and today it is still sitting on my credit report. And this guy is 120 delinquent on his payments, and it's affecting my credit and DTI ratios. I feel that my digital ID has been stolen. What do you think I should do to have this removed once and for all? That's Bob.
Consumer has been caught in the gears of the credit combine a little bit. Credit reporting is mostly an automated process, meaning no human being sits there and reports information to the credit bureaus. Someone the size of a Wells, massive, massive lender, every single month that item is being re-reported to the credit bureaus, and they're kind of manually having it deleted. What they should do is in their automated tape that's sent every month, they have to remove it from that. Here's the issue. What you just explained is a garden variety Fair Credit Reporting Act violation. You challenge something that you know is wrong. It's validated to be incorrect, yet it still keeps popping up on a credit report that is then shared with the lender. It's the disclosure to the lender with the error that is the violation of the Fair Credit Reporting Act. So if this consumer cannot get this thing off once and for all, this is a very, very good time to speak with a consumer attorney who practices Fair Credit Reporting Act law and get not only the bureaus involved because they're the ones who are disclosing this information, but also the bank involved because they're the ones who are furnishing the information. There's no easy way to get it corrected if neither party is willing to do the right thing and permanently have it removed.
To save this guy some legal bills, can he write a note that says, you are violating the Fair Credit Reporting Act? I demand X, Y, and Z?
You'd be surprised how many attorneys would take this pro bono on contingency, because this is what you just described as a slam dunk.
Yeah, because it's like...
It's indisputable.
Right.
If they've had it removed multiple times and then all of a sudden it keeps popping back up, they're the ones who are sent. The bureaus don't just magically put something back on a credit file. The lender keeps reporting it. That's the disconnect.
Unbelievable.
So there's so there's money in there for the attorney.
Yes. Yeah.
Don't worry. Attorneys always find the money. That's never been a problem.
Statutory damages, legal fees, punitives. They never go to trial. They always settle, and this one is slam dunk.
Person didn't give their name but wants to know, how can I quickly clean and improve my credit record? I know that's a broad question, but...
Yeah, that's actually a good question. If all of the stuff that's on the report that's making it dirty is valid, meaning it actually belongs to Mr. or Mrs. Anonymous, then it's hard to have it removed because it's valid and it belongs there. All of that stuff has a statute of limitations and it can only stay on for a period of time. Most bad stuff stays on for 7 years. There are some exceptions. Some stuff stays on for 10. Some stuff stays on indefinitely. Look, and trust, please, I am not endorsing credit repair, but there are services that you can hire that will attempt to have information removed from your credit reports. They're not free. They charge a subscription. And some of them are very successful because they challenge information. It doesn't get verified, which means it has to be removed. So if you choose to pursue that avenue, then go for it. But just keep in mind that the Federal Trade Commission and all three credit bureaus consider that to be a scam.
Okay, got a few more in the chat room, and then before we will let you go eventually. We don't chain you here, I promise.
What's this on my leg then?
I know, that's Jack. Denise wants to know, she's going back to that score of 790, going back to 590 after a foreclosure. How long will it take to go back up to the original good credit score? In other words, if you do have that blemish, if you have a foreclosure or a short sale, then generally, how long does it take to get back to where you were?
Well, it's on your file for 7 years, but your score doesn't suffer for 7 years. Generally, something like that will have the most negative impact for the first 24 to 36 months. And remember, we're talking about one component of what drives your score. There are a lot of other components that will not be affected by the foreclosure. If she can compensate, because she's doing very, very well in every single area right now, but she's going to lose some points in that payment performance category. If she can stay out of credit card debt, not take on any new debt, not excessively shop for credit, then you'd be surprised how quickly her score will improve. And here's why. Because it is clear from this example that that would be an atypical event. If she had 7 or 8 charge-offs plus the foreclosure, she's got a problem for a long period of time. That's an atypical event. So as it ages, 24, 36 months, her score is going to creep back up just even organically.
Well, that's good to know. It makes you feel like there's a second chance here. Tom wants to know in the chat room, are you advocating foreclosure instead of a short sale, or is a short sale a better alternative?
They are. Again, like I said, don't listen to your agent because they'll tell you that the short sale is a better alternative.
It's the same, right?
It's exactly the same. From a score impact, a foreclosure, a deed in lieu of foreclosure, a settlement, or a charge-off are all the same. They're all the FICO 7 deadlies. They're all equally bad for the same period of time. So choose the option that's best for you. And the best, look, do what's right for the neighborhood, too. A short sale really is better for the neighborhood than a foreclosure. Why? Because you're taking care of the home. You're not ripping copper out of the wall. You're mowing the yard. You're trying to market it.
Right.
Foreclosure, you're walking away.
Right.
Right? So short sale is generally the better way. And plus, Fannie and Freddie also have policies that they will let you back into the mortgage environment quicker with a short sale versus if you just foreclose.
Oh, that's interesting to know.
And in terms of the negotiation that goes on when getting a loan, some of it obviously is based purely on score, but it seems to me, am I wrong in thinking I've got a better chance if I can say, look, this was a short sale, these are the circumstances?
That's exactly right.
Okay.
Yeah, and the mortgage environment is the only environment where you do have an opportunity to plead your case.
Right.
When you're applying for a credit card, there's no one to plead your case to. The decision is pre-made by someone in a different state that you'll never, ever meet.
Sure.
But when you're going through a mortgage, there is still a human interaction when you can't explain those types of things.
Okay, this is kind of an intense question, but I might as well end on a high note here. This guy says, Doug, should banks be allowed to control our credit? Here's the deal. I was laid off, no fault, and have not been working for 8 months. I've lived off my 401k because I had to. I didn't get severance. That is now gone, and I'm getting behind in my credit card payments. Employers review credit scores. If my score goes down, I may not find employment because of my score, and therefore I cannot pay the credit card companies because of what they are reporting. This is certainly a downward spiral that is controlled by the banks and credit card issuers. I believe the system works exactly backwards in that your credit is suppressed when you need it most to pay them back. Without the means to get employed, why should they be allowed so much control over our lives?
So just one clarification. Employers do not have access to credit scores. We've talked about this before. That is the myth of the decade still. and we're not close to the end of the year yet. But they do have the opportunity in many states under federal law, especially, that they can look at the credit report, right? No scores.
Yeah.
Certainly not all employers review credit reports as part of their pre-employment or continued employment screening. Certainly some do, and they will hold that against you. Look, I completely understand his argument. I can't get a job, so I can't pay my bill. I will pay my bill if I could get a job. What are you doing to me here? It's just a difference in opinions, quite frankly. I understand his position, and I feel for him. But I also think that when an employer hires you, you have to keep in mind that you represent the employer, and the employer is liable for your actions. So I think it's fair.
You're kind of a hard ass.
Wow. Well, I just have to think of it from that perspective, because you can't open the newspaper and not hear about some sort of massive data breach that some employee did. And I'm telling you, if they would have done a better job of screening, you may have been able to weed that guy out.
And this is also a good argument for people because what we tend to do is we look in our field and we expect a certain salary commensurate with the one we had before we were laid off. But in a case like this, this is when pulling coffee at Starbucks, whatever the job is that will get you a little income, enable you to keep on paying at least the minimum payment. And you go into an interview and you say, look, I know I'm an engineer, but I'll do whatever it takes. And that's why I was doing this. And
the difference in employment credit reports is, unlike lending, when you have to just give some sort of intent or that you're going to be applying for credit, which is actually permissible purpose and allows a lender to pull a credit report. In the employment world, you have to overtly sign a piece of paper giving them permission to pull your credit report. You can certainly withhold that permission, but they can also hire the other 7 people who are applying for it. Okay, so that's the trade-off. You can and I always take this. This is my perspective on the issue. Be very, very forthright and open about it. Look, yes, I'm going to allow you to pull my credit report. Here's what you're going to find, and let me give you let me have the opportunity now to explain why it's there. Because if you don't, you're not going to get an opportunity after they've turned you down.
And Doug just wrote an email back. He said employers do look at credit scores with permission, and they don't look at your application unless you give permission.
So, okay, well, we're going to agree to disagree. All 3 credit reporting agencies and their trade organization have all gone on the record time and time again saying that they do not provide credit scores along with pre-employment credit reports. So we're just going to agree.
I would
to
also
disagree
throw
on
in
that.
there, I don't think employers bother to do this until you're real close to the end of the process. I mean, if I'm screening resumes, I'm going to throw most of them out for many good reasons that have nothing to do with bothering to go to FICO or to Experian.
Well, FICO's not even involved.
Before you go to Experian, you're going to...
Let's just put it this way. I've been in this world since 1991. This is my 20th year in the credit industry. I have
so
never...
nice. You have an anniversary party.
I've never seen one verified example of an employer using a score to make a decision. I hear a lot of people talking about it, but I've never heard of an employer who's been able to say, yes, we do. The credit bureaus all say the product they sell to employers is different than the product they sell to lenders.
Yeah.
They can control what's being distributed to employers versus what's being distributed to lenders. A score is not part of the report sold to employers.
Last question from Susan. Will it help my credit score more or less to pay off a credit card or a car loan, or does it make any difference?
Huge difference.
Oh,
Huge
nice.
difference.
Susan, perk up those ears.
Yes. Credit card, credit card, credit card.
Wow.
Absolutely. I'll give you a personal example.
You?
I sold a rental home a couple years ago, $279,000 mortgage paid off. My FICO score went up 4 points. Right?
Okay. Yep.
4 points. So the revolving debt is the really, really valuable target here. If you can pay off the revolving debt, you would be surprised how quickly and how much your score will go up.
Wow. Jack, do you have any last questions for our credit expert before we...
Well, I guess my question would be, how much does the human element come into all this? We've been sort of concentrating on the numbers and the scores and all that. And I sometimes feel as if people worry about that a little too much. I mean, with this employment thing, my thinking is they don't bother to do that until they're this close to hiring you and they're looking for reasons not to. So that's why you take your advice and you say, look, here's what you're going to find. And as soon as these paychecks start coming in, that's going to go away.
Yeah.
In other cases, are there also situations where the human element, you can negotiate your way out of these problems?
Yeah. And generally, especially when you're dealing with a lender, remember, the larger the lender, the more automated the decision is going to be, okay? And it's already predetermined, right? Centralized lending, decisions being made somewhere else before you even fill out the application. Think small, think local, think regional bank, think credit union. Why? Because they live in your community, they understand the local economy, they understand the local property values, and you're more likely to be able to talk to the loan officer because he's in that office versus in that state.
So do you think that is there, I mean, just given how mortgages are starting to obviously come a little bit more, at least the housing market is not as crazy as it was. People are starting to buy houses again. Do you think banks actually have the wherewithal to look at the whole person anymore, or is it just all scores?
No, we're not headed in the right direction. I wish I had a better answer for you, but we're not headed in that type of direction. We're still headed in a more automated direction. And it's not that they're looking at more scores, it's they're looking at different scores and they're looking at more information. If you ever follow any of the kind of the risk management forums, the one thing that they're asking for continually is, how do I get more information? Yeah. I know what's on a credit report, but it's the same information that's been on a credit report for the past 3 decades. Where can I get information that's not on a credit report that has value? and helps me make a better decision about whether or not I want to do business with this applicant and what I want to charge him or her to do business with me. That's the kind of information that they're looking for.
Okay.
They're definitely not interested in your explanation. It's more data.
By the way, that's Megan's very subtle approach.
Shut up.
Shut up.
Shut your file.
John Ulzheimer, thank you so much for joining us. We will obviously have you back. Jack, it's like you get an education every time.
Absolutely,
this guy
yeah.
comes. It's amazing. Yeah. You are the, I got to think of a good name, like the credit czar. How about that?
Czar,
How do you feel about a czar?
The guy that I used to work for at Credit.com called me the score lord.
Oh,
The score lord.
there we go. Yeah.
I like that. Score lord John
We need another
Ulzheimer.
sound effect to go with that, though. Next time you come here, whenever we
That's
say
right.
score
We're gonna
lord,
have to find one for
we'll
him.
hear something.
By the way, keep checking back at MoneyWatch.com. By the way, for those of you, as John did say, hey, Sally, pay attention. I'm going to tell you to put this up on the screen. We actually have a brand new article that's up that's called Best Credit Cards for 2011 because, as John says, you don't want to just take yourself out of the entire credit game. But there are some really good cards out there, good rates, good for those of you who have balance transfers. Oh, look, there's John in an old video. We'll have to sub in a new one.
Thankfully, it's not the same shirt.
Yeah, I'm wearing that shirt now. Best cash back rewards, airline miles, and we have best overall. So, I mean, I think there's a lot there, and we're going to interview John specifically about a couple other topics. So keep checking back at MoneyWatch.com.
Tuesday is the 1-year anniversary of the Card
That's
Act.
right.
Isn't that exciting?
That's
That
right.
was the genesis for this story.
Wait, this past Tuesday
no,
or
no,
this coming
the
Tuesday?
upcoming Tuesday. Tuesday the 22nd.
That's right.
Gotcha.
Yeah.
Fantastic. So anyway, John, thank you so much for joining us, and we'll be delighted to have you back, and it's been a great pleasure. And if you've got more questions for John, he will be back. Don't worry. We'll let you know when he's on Ask the Experts the next time. I'm Jill Schlesinger.
I'm Jack Otter.
And he's John Ulzheimer, the score. What do we call it?
Score Lord.
The Score Lord. Thanks for watching Ask the Experts. We'll see you next week.